Greetings, everyone. This is RKrivo with our chart drill down for Thursday, February 9th, 2017. Don't forget, as I mentioned in the last video, if you have a trading question that you'd like me to address in a YouTube video, please be certain to email me, RKrivoFX, right down here at gmail.com, and be certain to put YouTube question in the subject line so it kind of stands out from the other emails that I get. And if there are enough of these questions each week, I'll devote an individual YouTube segment to answering them. If you just want to send me an email with a question and want it answered that way, that's fine as well. Now, my objective in each of these chart drill down videos is just to show you how I go about identifying the strongest trending pairs, those that are more likely, though not guaranteed, to turn into winning trades simply because of the stronger trends, the stronger momentum. Now, I'm simply showing you what has worked for me, and it may or may not work for you. And remember, trading is all about probabilities, and what we're doing here is identifying a trading edge, something that we can exploit. The idea is to provide us with a higher probability trading opportunity. And the more of those edges that we can identify, the greater the likelihood we may be profitable at the end of a week, a month, a quarter, or a year. Now, with that, let's quickly go over the disclaimers. Not going to read them to you, but just always bear in mind significant levels of risk when you're trading FX, and only trade with risk capital. That's money that you can afford to lose. The high degree of leverage, which appeals to a lot of traders. Remember, it works both ways. It can work for you and against you. And the content I'm providing here is for informational, educational purposes only, not intended as specific trading recommendations. So with that, let's take a quick look at the charts. As you may recall, I use a strong weak currency analysis to point me in the direction of the pairs that are in stronger trends. This doesn't necessarily mean those are going to be the pairs that I'm trading, but they're in stronger trends, so I go to them first. And then if they present a viable setup and they're also in a strong trend, that's what I mean when I say we've got an edge or two or three or four working in our favor. Now, if you want to learn more about that strong weak analysis, again, email me at rkrivofx@gmail.com and just put strong weak analysis in the subject line. Now, the most recent strong weak analysis that I did, which was just a few minutes ago, it indicated the strongest currency out there right now is the Aussie dollar, and the weakest is the US dollar. So with that, that's my first stop when I look at the charts, when I go to drill them down. And the Aussie US dollar, let's take a peek here. I've got 4 charts set up, multiple time frame analysis, a weekly, daily, 4-hour, and a 1-hour. And let's expand this weekly chart a little bit. And here we have the Danshin channels. You can find out more about those as we go through and as you go through other YouTube videos that I've done. But the idea here is if a pair is in an uptrend, it will have touched the lower channel line, and then it will take out the upper channel line. Right now, we can see here that on the weekly chart anyway, this pair has not taken out the upper channel line yet. It has touched the lower. So the ideal situation on this chart to determine that we're in an open buy situation, in other words, we're looking for buying opportunities based on what we see on the weekly chart, will be if price action takes out that upper Danshin channel at 0.7777. Right now, though, the pair has been moving up for an extended period of time. If it takes out that upper channel, and it well may, and the indication here from slow stochastics, which I have set to 15, 5, and 5, is with good angle and separation here, that momentum, upside momentum, is still prevalent in this pair. So we'll see what happens, but remember, nothing happens until it happens. I'm not going to bet on the come in this situation and say, well, look, it's been going up all this time. It's probably going to take out that upper channel. It well may, but until it does, it hasn't happened yet. So don't get lured into that. But what I'm seeing here is for several days now, excuse me, this is a weekly chart, for several weeks now, the pair has been moving to the upside. Now, what that tells me on the weekly chart is that with this momentum, I'm going to likely find, and I do on the daily chart, that price has, after it took out the lower channel, hit it here and then moved it quite a ways down, it took out the upper channel. So based on the daily chart, I'm in an open buy situation. Slow stochastics is above, slightly above the 80 mark. So I'm looking for buying opportunities on the lower time frames, on the 4 hour and on the 1 hour. Now, if I look at the 4 hour here on this pair, I see again, took out the upper channel. It touched the lower channel way back here on December the 28th and took out the upper channel and has not looked back yet. In fact, since the time it took out the upper channel on the 4 hour chart, it has moved up a total of 418 pips. Right now, we're up about 350 pips. So what I'm looking for here for an entry is if and when price action on this 4 hour chart, it's pulled back a little bit, about maybe to the midpoint of the Donchian, between the upper and the lower Donchian channel. If price action on the 4 hour chart takes out that upper channel line, which is at this point, let me take a quick look here, get it close for you, 0.7696, that would be an entry point if I choose to take it. And there's a couple ways I can enter the trade. One is I can set a price alarm, which I like to do a lot. And when that price alarm goes off, when price hits 76.96, I can then take a look at this particular chart. I can take a look at all the Aussie pairs that are out there and see, is the Aussie strong, the Aussie dollar strong across the board? Because if the Aussie is getting stronger across all the pairs that it's represented in, that's a good sign. It's not just a random one-off kind of event. So that's when I set a price alarm, and I'll take a look when that alarm goes off. Is the Aussie moving up across the board? Is the US dollar weakening across the board? Then that's a very good indicator that this pair is likely going to have some follow through to the upside. Now, also what I can do here is move down to a lower time frame chart, which is the 1 hour chart in this case. And we can see on the 1 hour, it took out the lower channel here. And it's just, and this is a 200 period moving average. Notice how nicely and tightly price has been respecting that 200 period simple moving average that we have down here. If we're trading true Donchian channel strategy, the next entry, potential entry off this 1 hour chart in the direction of the longer term trend is going to be at 0.7666, which is the upper Donchian channel. And in Donchian strategy, we place a price alarm at that level if we're trading off the 1 hour chart, or we can place an entry order if we want to go about doing it that way. Place an entry order. I always go a few pips above the upper channel line or the lower channel line in a downtrend. But so we could set an entry order at, let's say, 76.70 or something like that, and that'll automatically put us into the trade. Ideally, I like to set a price alarm, and that way I can come and check it out, have my eyeballs on the charts in real time, see what's going on across the board. We can see slow stochastics here. It's got angle and separation to the downside. So potentially there might be a little more oscillation here. Pair might move a little bit lower, but our entry is going to be up here. We're not going to jump the gun. You can if you want to. It's a more aggressive style of trading. It's also a riskier style of trading. So let's say this trade does play out, and I get in the trade when price action moves above that upper Donchian channel. My stop would go, based on true Donchian strategy, below the lower Donchian line, below the lower Donchian channel, right down there. And then if and when price action continues to move up, let's go to the 4 hour chart. That's a little bit better representation here. Teaching you a little bit about Donchian channel strategy here. When price action took out the upper channel right here, my stop would have gone below the lower channel. And then you see when price continues to move in your direction, the lower Donchian channel line follows price action. It follows it up. And what I would do, my initial stop was down here. And then when I come back and check the charts, maybe, several hours or the next day, you don't have to sit in front of your monitor all day long. That's one of the beauties of trading longer term type of strategies. You're trading off a 1 hour chart or a 4 hour chart as opposed to a 1 minute chart or a 5 minute chart. Anyway, the stop started out here. We move it up, we move it up, we move it up, we move it up, following that lower Donchian channel line. In a downtrend, we do the opposite. We lower our stop as the upper channel line moved down. But you can see here, I'm always having a respectable distance between my stop and price action. So it allows, Donchian channel strategy allows the pair and price action time to mature. You're not having a really tight stop. You're letting the pair play itself out, if you will. And you can see here, never once did we come close to the stop. And this is on a 4-hour chart. Another pair that I mentioned, you want to take a look at pairs that potentially have good setups, and you're only going to see that by laying your eyes on the charts, looking at the charts type of situation. One that I did notice, and right now, for example, let's see, the pound is the third strongest currency that's out there. The New Zealand dollar is the first weakest. But what I'm noticing here is, see, it was moving down, still is moving down on the weekly chart. This is the pound New Zealand. It's still moving down. We get a little curl here. It hasn't crossed over to the upside on slow stochastics. So we're still in a downtrend. It hasn't touched the lower channel and taken out the upper channel yet. That would be, on the weekly chart, the sign that, okay, we're in an open buy situation on the weekly. But as I was drilling down the charts earlier, here's what I saw on the daily. Okay, took out the lower, didn't quite yet take out the upper, but it tagged that upper Donchian channel line, and slow stochastics is beginning to curl to the upside. So this would be a little more aggressive type of trade, but we can see that over the last 3 days here, it's been moving up. And as I look at the 4-hour chart, okay, it just about touched, but not quite, the upper channel line. This is for those of you who like to maybe see if you can get in trades a little bit earlier, a little more aggressive type of trade. Here, touched the lower channel, took out the upper, and has continued higher. Now we're in a period of retracement right now. We'll see what happens. But I mean, this is one of the beautiful parts, if you will, of using multiple time frame analysis. What I can see here by multiple time frame is how a pair is moving over time. Four in this case, different vantage points, if you will, 4 different time frames that I'm looking at. So for those of you who might be a little more aggressive, you're in a situation here where on the 1-hour chart, it tagged the lower channel, took out the upper channel. It's about to maybe take out the upper channel line on the 4-hour chart, and it's already just tagged the upper channel line on the daily chart. The reason I bring this up this way is because some of you, well, is there a way you can get into trades when they're beginning, a little bit earlier rather than after the trend has already begun to mature, if you will? And yes, you can do that. But again, the sooner you get into a trade, the less developed the trend is, the more risk you're going to have. But if you're interested in it, this is a pair that I'm looking at, at this point for those traders who are interested in that type of a situation. Okay, we've got a couple more minutes here. Let's take a quick look at another pair. Let's go we looked at the Aussie USD, the pound New Zealand. Let's look at the Euro Yen. And I'm just basing that on the strong week analysis. And we'll see what is going on there. Okay, in this situation, on the weekly chart, we can see here, tag the lower channel line, took out the upper channel line, so we're in an open buy situation. But here, this is a good example of a pair that I might shy away from a little bit at this point. On the daily chart, we can see it's taken out the lower channel line. So we're in an open sell on the daily, an open buy on the weekly. So in a situation like this, I want to let the pair work its way out of this a little bit. And I would not consider going long, which is the trend at this point, this pair until price action would take out the upper channel line on the daily chart. Then the daily chart and the weekly chart are in sync, and that helps things out a little bit. Okay, thank you very much for attending. Feel free to email me with any questions. I'll be happy to take them. Look forward to seeing you next time.